Thomas Hess, attorney in Miami, Florida, recently shared some thoughts regarding anti-money laundering laws. The Bankers Association has joined calls by the private sector for adjustments to the laws to halt the flow of dirty money through the financial system. In a published statement in yesterday's Carter News, the Guyana Associations of Bankers urged for action to end the current political impasse which has left the amendments to the Anti-Money Laundering and Countering Financing of Terrorism Act in limbo. The bills laid earlier this year are critical to stop impending sanctions against Guyana for not having proper mechanisms in place to reduce the likelihood of monies derived through illegal means ending up in the hands of terrorists. Guyana has until next month to pass the legislations in the National Assembly before a regional review by an oversight body. However, the legislations when tabled earlier this year by government were sent by the opposition to a special select parliamentary committee to be studied. This was despite protestations by government that the country could face sanctions. Earlier this week, in the absence of the opposition, the government completed work in the Select Committee and announced that it be taking it back to the National Assembly for debate and hopefully passage. According to the banks, a strong AML/CFT legislative framework is fundamental to the continued functioning of all of Guyana's commercial banks in accordance with acceptable international standards. Thomas Hess also shared the United States banks start severing ties with Guyana. Guyana's failure to pass anti-money laundering laws is being felt in the banking sector, with at least one overseas financial institution reportedly severing ties locally. The news would come even local lawmakers continue to wrangle over the Anti-Money Laundering and Countering the Financing of Terrorism bill. In August, the bill was sent by the opposition to a special select committee of the parliament, despite protests by government over the approaching deadlines. The opposition said that it wanted more time to study the bills and make recommendations. The private sector and insurance have already expressed worry, publishing whole-page advertisements in the dailies over the fallouts of the delay. Guyana has until next month to amend its laws to assure the international community that the country has taken mandatory steps to reduce the possibilities that dirty money is passing through its financial system, via money transfers and otherwise, to finance terrorism. Failure will see Guyana being blacklisted with question marks over transactions originating locally. But there's more, according to Thomas Hess, attorney in Miami, Florida, as set out below. Local banks are already feeling the squeeze, with Citibank, one of the largest institutions in the United States, writing and severing corresponding relations with a local bank. He declined to name the bank. Similar measures are also reportedly being taken by some business entities in Trinidad. However, the situation is a serious one, with Bank of Baroda itself being told by its sister branch in the United States that it may have to end ties if no movements are made with the laws. New laws, adopted by countries around the world, mandate bankers, insurance companies, money transfer agencies, pawnbrokers and a host of other service providers to alert authorities of suspicious transactions. The agencies will have to appoint an implementation program, appoint the special officer, report large cash transaction and even suspicious behavior by its customers.